Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, August 20th, 2026. All right, so markets are closed, and what I'm going to do is an update, a very brief update on the equity markets. Been covering those pretty tightly lately, and of course, we'll talk on financials, which did give me that follow-through BOD sell signal I've been waiting for, as well as the S&P 500 SPY. So we'll look at those guys. Quick look at Treasury bonds. Those continue to remain very, very close on my radar. And then I'm just going to dive in. I have enough subscriber questions, chart requests, and some trade update requests that hopefully everybody will benefit from at least some or all of these. So let's just start out here. This is QQQ 60-minute chart. There's that trend line break right here, the rejection off the primary downtrend line off the highs. And we continue to move down. So maybe a little small trend line here that if pop could trigger a counter trend rally. But again, nothing's changed. And if anything else, as I said yesterday, it just further increases the odds, based on the impulsive nature of that rejection off the trend line and pretty much nothing but red sticks on the daily so far. Go to the daily. That's what I'm talking about. Red candles meaning red closes. We tested it for 1, 2, 3 days, and then a rejection there. Currently, we're back down. We hit the 50-day exponential moving average. This is a daily chart. If I don't make mention, the time frames are always up here. You have the daily box highlighted, D for daily. So that's and then QQQ daily. So that if I forget to mention, that's the time frame I'm on. All right, so the 50-10s act is a near-term trend indicator when you're above it. Here, we'll turn off all the lines. Look at that. That's one of many things I'll keep on the chart. When you're above it, you buy pullbacks to it, keeps the trend going. And once you break it, it's been a trend change. Again, a near-term indicator. It's only 50-day moving average. And then you can short rallies back to it, which would have worked out pretty good there. And once you're above it, the near-term trend's bullish. So that's a significant level to watch going forward. I suspect it'll be taken out. But as I like to say, support is support until unless broken. But so far, so good. You have that bearish PPO crossover in the works here on the daily. If I throw up a histogram right here, you can see it appears to be imminent. There are no guarantees. Sometimes the histogram lines will start to cross or they'll tag and you get a rejection. But for the most part, pretty good trend indicators. I look for these big green hills. Remember, trend indicators like the PPO histogram and the 50-day moving average don't work so well in a sideways choppy market. You're going to go through those trend indicators. It's when you get decent trends one way or another that they work best. So you can see it doesn't take an expert chart technician to see where we're probably going to go. We're probably going to get a crossover. And again, those bearish crossovers are usually associated with periods of corrections during bull markets. And bullish crossovers and green histogram bars are typically associated with uptrends. So that's kind of the nitty gritty on QQQ. Not much more to add there. Still maintain T4. And the S&P 500, zooming down to the 60-minute chart. In recent days, I told you this was a level to watch, 767.37. We had first the wedge breakdown. That was a sell signal, and this was the first support level. We danced on it for a few days, and we gapped down below it today. And you can see they spent the first half of the day testing it from below, confirming we were still below there, and that's significant resistance. And when the bulls figured out the bears were in control and they couldn't regain that level, you saw that selling in the end of the day and into the close today. So levels to watch, of course, that's still support. Resistance is still resistance. So any kickback to that level would provide an objective short entry if you're trading SPY. You also have a potential gap to be backfilled should the markets pop up tomorrow. It could backfill that gap. That would be an objective short entry as well. And anything much more than that, you still have resistance here. I'll address it if that happens. Again, not my primary scenario, so don't want to spend too much time on it. 60-minute PPO on the SPY, S&P 500 is clearly crossed down below the zero line, keeping that near-term trend indicator on a sell signal. You can see down here, you had these are the areas where the PPO the PPO line, I'm sorry, was below its zero line, that dash line right there. And you can see that caught those corrections that we've had so far. And the rest of the time when the market was going up, PPO was above there. So this trend indicator says the near-term trend is bearish right now. So continue to watch this as the next significant level. If taken out, it's more of a zone. So really you want to see the bottom of the zone taken out. A support zone is when I have two levels in close proximity. I'll just refer to it as a support zone instead of two separate single support levels that are so close. And, percentage-wise, we're talking 0.5%. So that's why that's a support zone. And, it's a level I expect to give way. And when it does, the technical significance, once again, will be a failed breakout. That was a previous all-time high in the SPY. That's where we got that comparable sell signal when we shorted QQQ initially. And so this whole thing right here, that strong rip was the breakout to new highs. So if we go much below it, and again, I view it as more of an incremental, not a binary thing. I mean, technically, if you fall below that 759-ish, 34 level, this high right here, that's a failed breakout. But as I've said, it's not uncommon to see a security or an index when it breaks out to slightly undercut the previous high if it's going to hold and go into new highs. Again, that is not my preferred scenario, but that is something certainly to watch for. So again, incremental. The further we go down, and the big thing would be to break, just like in QQQ, the multi-month trading range that we have. So on SPY, you can see it had a multi-month trading range right here, recently broke out. And so again, from my experience, when you have that, if you fail the breakout, it's typically a pretty swift, mostly unidirectional move down to the bottom of the range and then quite often down below. Because as I like to say, fewer things in trading are more bearish than a failed breakout. Just like a failed breakdown is very bullish. That's exactly what we had earlier in the year when QQQ broke its trading range. If you go back a little further here, it was earlier in the year. I'm referring to this multi-month trading range we had here. Got a breakdown, went below the 200s, and once it took back the 200s, especially back above the trading range, and that's what happened. It was a swift move back up, and it didn't stop. Didn't pass go, didn't go straight to jail, don't collect 200. That's the move you had. So there's an example of how it worked in reverse. And so again, QQQ right now, the technical posture is a little different than SPY. So SPY, I'm looking for kind of the same thing, but in reverse here. This is the daily chart. So there's our trading range. And if we get down into it, shoot down below and probably have a run back, just like QQQ will probably come back and test that previous trading range, the 200-day moving averages, everything else. Okay, so all that XLF, nothing but red sticks in the last couple days here. Beautiful little wedge, divergent high, and my BOD support is clearly taken out now. So just to recap, if you're brand new to the site, been identifying and watching this wedge before it broke down, saying this is what I needed to see to get a good sell signal in the market. And that's because this is the financial sector, second largest sector in the S&P 500. And it's to a large extent what lifted, almost exclusively what lifted the S&P to new highs while the NASDAQ failed to make new highs. And you can see we broke down. So that was sell signal 1 on the break below the trend line. Danced on my BOD or benefited doubt support for a few days, 57.63, and then gave it up today. Clear. We don't have to squint to see it. As I said yesterday, we were below it, and I said that is that. You can take it on face value, but I said, ideally you want to see a clear move down below, and that's that. So anything's possible, but that's as good as it gets. So there's check mark 1 was already there, and this is check mark 2. And so still have plenty of downside. And again, I'm at this point in time still just looking for correction, open to possibility of more. Many things are going to go into my decision whether to extend or add additional downside targets on QQQ, including but not limited to what the financials do and very, very much what Treasuries do. Speaking of the devil, let's get to that. We'll look at the bond yield first, the 30-year bond. So as predicted, they're not, the Treasury The Fed, politicians, nobody's going to lay down and die and let this happen, nilly-willy. However, I've given you my thoughts. I don't think that Bessent, the Treasury, the Fed, Trump, you name it, any forces in the U.S. are power enough to control where interest rates, long-term rates, ultimately go. Again, the Fed sets federal funds rate. They can keep it wherever they want for as long as they want, but that's not the rate that affects the consumers, businesses, or the economy. And the bond market is, in my opinion, just too big. You can, of course, do these short-term shenanigans, which they've always done and always will do, to support, to foil a breakout in yields. But again, it's one that I continue to watch. And as of now, we're still at, remember, this was a triple top high right here, a breakout to not just multi-year, but multi-decade highs. And we're still above there. And again, I mentioned you can take a Treasury long, remember TLT or ZB, your Treasury bond, 30-year bond futures are going to move the opposite direction of yields. And, it's still a potential hedge. I have not listed as an official trade idea, and that's a reflection of my confidence. It's still, to me, just hey, let's watch. I'm watching this. And basically what I'm open to is if Bessent's big bet, or jawboning, let's call it, doubling, threatening to do more than double their current purchases of U.S. securities in order to keep yields down, the long-term bond. If that proves to be nothing more than just a one-day pop, which it was, and we keep going down, that's going to tell the world, it's going to tell the financial markets that not only has the Fed, which I've maintained for a couple of years now, and illustrated, that's not debatable. Fed lost control of the yield curve a couple of years ago when they started the previous, they did the previous two rate cutting cycles, and long-term bond rates went nowhere but up in the opposite direction. So that was proof that the Fed's impotent now as far as long-term rates go. Oh, sorry, phone call there. In the middle of setting up a new phone, and I guess the phone number transferred. All right. So that's that. Watching that very much, and again, that will play in, as I've shared many times over. If long-term bond yields continue to move up, which is going to push prices down, there is absolutely, positively no way I can spin that or figure in any universe that it is anything but net bearish for the stock market. So we'll see. And again, I'm open to it. Guys, I'm watching. I'm going to react accordingly. So hopefully that makes sense to you. Wouldn't surprise me to see a decent, half decent or better rally, especially if, Treasury, and it'll be not just the Treasury Department, all these central banks band up because they're all in this together. When the U.S., what's the saying? When the U.S. catches a cold, the whole world gets a flu. The rest of the markets go down. So you can bet your bottom dollar. And they're in the same mess that we are. Fiscally, the big G7 countries, especially Japan. So, all right, guys, let's move on. Let's get to the questions, and we'll dive right in here. I'll just go in reverse order, and we only have a few posts because I believe I'll make sure we got all these yesterday, I believe, in that one. Let's start right here. This is under the SpaceX post today. Final target hit. So what does that make us? At least 3 for 3. And again, there's micro trades within trades. If you're an active trader, I talked about that. These are just comments. This geo trader here wants to go long on SPY. Okay. And someone replied to that. So those are comments, not questions to me. My thoughts on SPY. Sure, I'm going to bounce tomorrow. I'm not, going to call a day-to-day move, but I think in the coming days to weeks, there's more downside. So today was an objective time to add to short exposure, in my opinion. But that's for a swing trade call, not today, tomorrow. It's more of where we're going in the next coming days to weeks. Okay, back to the homepage. So those are just two comments. And here we have let's see. Yeah, here's a bunch of them reloaded. Okay, all right. Can you give your thoughts? Yep, glad to do this. So Reloaded asks for my thoughts on Microsoft, SpaceX, EMR. They say stating breakdowns are underway. Beyond BYND, Beyond Meat, that's still an official trade, active trade. I'll talk about that. PGR may be headed towards his or her 229 target. FIS, SPCE, sideways down. Okay, I've got all these. And then just somebody asked about strategy. Does it have negative divergence? Do you expect it to go up? All right, let's look at that. Make sure I got them all. Oh, I'll get to that one too, Moderna, in a second. So let me go through in those order. I have them written down here on my notepad. Microsoft, Mr. Stofty. This is not a trade. It's not an active trade. My thoughts on it, well, just glancing at the chart, it's been a hot mess. You can see, turn off all the lines, busy. And here's a stock like many. Remember, the majority of the market leading stocks, the Mag 8, Mag 9, 10, whatever you want to call them, have gone nowhere for a while. So we've seen that kind of handoff from, the financials picking up the baton, taking the S&P 500 to new highs. But remember, the NASDAQ 100 doesn't have any financials in it. NASDAQ 100 is over 50% tech stocks, especially if you consider a lot of these have their own little subsector. They'll put them in like a Meta, I think, is in communications sector. They put it in there. Is it something like that? But either way, they're all tech stocks. And, you can see here, Microsoft is big support down here. That's kind of a lights out level, about 350. This stock's not at any risk of breaking that anytime soon. But when I turn back on all my lines, and before I do that again, you can just see this is the beginning of 2024. So you can see the stock since the beginning of 2024 has come up to that level. It was resistance. And once it broke above it, they've bought pullbacks to the level. So that'll be, if and when that happens, a very bearish technical development. Right now, the stock's above its 200s. Turn back on the lines. I did point out this divergent low, and I believe I stated it was one of the best. And back here too, same thing, divergent low, one of the best looking of the mag stocks, the mag 8s at that time on the long side. And it's been a swing trader's vehicle. But when I turn on all these lines, the best I can tell you is you had this breakout to new all-time highs and you danced on it and tested it for a while, successful back test, successful test, then you lost it here, okay? See, if you take that line across, that was the initial third target when we went long on that divergent low. Remember, we're swing traders. Swing traders try to grab these little ups and downs, rips and dips. Doesn't matter to me if a stock goes nowhere. Doesn't matter to me if I'm long-term bullish or long-term bearish on something. It's not going to determine how I'm positioned. I'm going to trade the trends within it. Might speak the bearish talk about interest rates or the stock market day after day for year after year. But again, doesn't determine how my positioning is. And on this stock, it's overbought. I wouldn't buy it with your money. It just hit my extreme overbought reading. What does that mean? I have a line here. It's 78.64. I believe I just covered it recently. And when you hit that extreme level there, that's usually about all the gas left in the tank. You don't want to be chasing it. Sometimes you'll punch up, make a slightly higher high at that point. After hitting the extreme, it's not unusual to then put in a divergent high by making an equal or marginal new high. So at best, maybe one last thrust up, and then it'll have a nice correction. That would be my take, my guess on Microsoft. But better fish to fry, guys. And I'm sorry I don't have a near-term opinion. Levels of trade, you get a gap right here. It's just a messy chart. You can see it looks like a Christmas tree from all my trend lines. So let me move on. If I don't have a strong opinion, I'm going to tell you so. And that one I don't. A couple people asked about SpaceX. There's not much more to add. And there's one comment. I will get to that and address it. I actually want to get feedback from some of you guys on that comment and my earlier comment that I made on SpaceX today. So we played this one like a grand piano. We're not batting 1,000 on it, but if we went long right here. which was effectively the bottom since the IPO. We slightly undercut it, kept with divergent lows, never even came close to our suggested stop. That was trade one right here. We bought it here. We hit all 4 of my price targets, turned around, sidestepped that big give back. We even shorted it, pulled back to the 2 targets there. And I'm sorry, that one got stopped out. My bad, guys. I meant to say that's the one that got stopped out for a small loss, relatively small loss, much smaller than the gain we made on Game in the Bounce. And then we just ran it the other way recently and got up here. Like I said, it's not just this 30-minute chart. I showed you that's very significant resistance, in my opinion, on the daily chart. So it wasn't a random level, and I addressed that at the time because somebody asked about that one. Their question was, hey, you just shorted last week. It didn't work out. Now you're shorting again. What's that all about? Like, didn't sport a case. I said, yeah, if I liked it back there, I like it even better here. You can't, this stock doesn't have a lot of trading history. Keep that in mind, and that's why when I was asked about it here, I said I wouldn't touch it. There's no trading history, and all I could tell you was one of the most overvalued IPOs in history. That was a fact. But you can't trade off fundamentals because overbought, overhyped can get it more overbought, overhyped. So I waited, and boom, we went long with that initial low, caught the biggest pop since the initial IPO pop. And we've been trading it since. But again, the takeaway is that was very good support. So I just want to mention that I trade, as I often say, I'm a big believer of trading on multiple time frames, not just watching one. Most of the charts you got on this trade, and it was based off, the targets were based off the 30-minute chart, but very much factor in. So, and that's the level there. You can see right there. So we shorted it there. We hit T1. If you game the bounce, I re-highlighted there as another short entry. So that was a 8% drop. If you gamed the bounce, if you covered and or went long, you made another 8-9% on the way up. There's 16, and then you turned around. If you shorted there, which I said was an objective re-entry, new short entry, then you made another in just 2 days, 3 days, whatever, 12%. So you could tally that up. Again, that's swing trading, and that's why there's multiple targets. Upon the initial tag of each target, a reaction is likely, and then where the final target is. And then somebody asked me, I'll get to my thoughts where it goes from here. I don't have a strong opinion, but I'm going to answer that. Let me just read my comment. I'll get to that in a second. All right, so that was SpaceX. Let's move forward. Somebody asked me about EMR. That's Emerson Electric. All I can tell you on that one, it had these series of, it's been building really divergences from this point here. And they've each played out for correction. It's in an uptrend. So again, divergent high 1, big drop. That's a double-digit drop back to the 200s. Divergent high 2. By that, I mean DH1 right here. Divergent high 2 right here. Correction 2. And it's usually that third time's a charm. So 1, 2, 3. Minor little trend line here. Price support here, so your BOD or benefit of the doubt levels just shy of 153. If that goes, these are potential targets. Based on the scope of these negative divergences and overbought conditions, me personally, I wouldn't go long with your money. I'd just wait to short a break of that level right there. So there's my thoughts, minimum targets right there. If things get ugly, I might add additional targets if you want updates, but you can just screenshot the video or stop it. It's 130, the actual support. You want to cover a little bit above that if that's your target. 134.35 and then 129.60 right there. But again, it's right at dual support now, so best to wait for that support to break because, as I like to say, support is support unless broken. Okay, PGR question. All right, so on PGR, I just gave an update the other day. You have some support here to 202.24. Remember, this was an official trade. We went long, either right on the long-term support on the breakout. You can look it up wherever it was. We booked profits at my first target here. To play it safe, I wanted to just take that money and run and cancel those two, but we went on to hit that initial final target, and that was it. So to me, that's the end of the run. I was only looking to milk a bear market rally in this thing, peak back here off a big divergent high. But I did give an update the other day, and if you ever want to catch up, just type in, go to the search bar here, and if you type in PGR, I don't think it's cap sensitive, but I always do. I forget if it is. I don't think I could make it cap sensitive, this search box. These are homepage posts. As you can see right here, it says homepage posts. Those are the ones that you get the emails on. But then the comments, if you scroll down here, post comments, and everything's dated. So I just updated it yesterday. I just want to bring that up in case you missed that. When you click on it, it's going to scroll you down to the post. So, and there was my thoughts yesterday. After closing the recent PGR trade out early at T1, it went on to hit my final target T3, my initial final target, to the button, and was smacked down hard from there. I think a case can certainly be made for an objective re-entry or new long entry here, or at least if it can get a little further away from the 200-day moving averages. However, it now has that big gap, which happened on the way down right after it got rejected from my T3. It has to contend to that gap. I'll flip back to the chart in a second, go over that. And so this is me saying, look, and this also, I'm going to get to a comment here in a second. So when I say I think a case can be made for an objective long, but I'm very clear that, or maybe it's not clear. Tell me, you guys let me know if, I try to be not overly verbose. I get, I'm very detail oriented. But my takeaway is that should have been weren't, typo. If I weren't bearish the financials in light of the recent wedge breakdown and pending an expected BOD breakdown, meaning on XLF, which this was yesterday, we got the confirmed breakdown today. So if I wasn't bearish that and waiting for that second and expected confirming sell signal, again, which we got today, then I might re-enter PGR. So this is me saying, yeah, sure, you can make an objective case. Objective just means that. I don't take a trade that's a shot in the dark. If something's in an uptrend or downtrend and it's in no man's land, there's no support, resistance around, that's not objective to me. That's just throwing a dart, picking an entry. My objective entries are breakouts of bullish or bearish chart patterns. They're pullbacks to support. If I think that support's going to hold, I'll go long. And if it drops to support and I think that support's going to break, I'll wait till the support breaks to short it. That, to me, is an objective entry. So on this one, yeah, it's objective. And if you like it, take it. And you did, I guess. It said headed up to your next target. And I go on to say there, however, if my call on the financials, which that call is the financials being in the very early stages of a correction, if that pans out, it's likely to drag down the insurance stocks, which are a subsector of the financials with it. And remember, Progressive obviously is an insurance company. So there it is. So that's the chart. And these are the same levels that I've had on this chart for a while. It's a recent trade, so none of these levels have changed. Now, the only level I would add, there's the gap I was referring to right there. The big gap that after T3, remember we hit T3 and we got smacked down. So that gap, traders are going to look at that gap. Bottom of the gap comes in around just under 226, and you're almost there now. So my best guess, PPO wants to cross back over. It's a hair above the zero line. Let's just say it's on it right now, even though it's actually a little below. Again, the financials just broke down. You want to know where I think it's going, even though that was, and even was an objective entry. I think it's going to get rejected there and drop. So that's my thoughts. And if you're in it, hey, trail up your stops, and wherever your third target is, then good luck. All right, next one up was FIS. This is I guess it's an official trade, should be listed in there. A lot of these, when I say that, guys, I cover, as you know, if you followed me for a while, 80+% of the trade ideas I give you are video format when I cover a sector, an industry, or just, I'll throw a lot of trade ideas out there and I just don't have the time. There's not enough hours in the day to make them all official by screenshotting a chart, putting these annotation, giving you stop loss, suggested stops, price targets. FIS, a quick update on it. Broke out above the downtrend line, triggered a long entry, hit my first target recently. Went a hair higher, had some momentum going into there, busted out, broke above that trading range. Right here, I'm talking, see some, it broke out, it consolidated right here, Once it popped that consolidation range, it had a little momentum carried through briefly above T1, came back in, and so far it's still above our stop. It's in no man's land right now. Max stop below 38.20. Does it pan out? Do I like it at this point based on my outlook for the market? No, I wouldn't add to it. I don't see enough in here to modify my trading plan. So that's still the official stop. But it wouldn't be a bad idea to tighten it up to maybe break even at this point if you took the breakout, not much more below that. Again, this is me speaking because, as you know, the saying in the stock market, all ships are lifted in a rising tide. Well, the inverse holds true in a correction. Most things will go down, and this is a tech stock. So, yeah, I wouldn't add to it. If anything, I'd tighten the stop up. Remember, when I give you a maximum suggested stop, that's based on the final target using an attractive risk-reward ratio, and it is just that. Everything on here are suggestions. These are, so, you know, and if it does go on and we get a healthy correction, the stock punches down below there, goes on, makes a new low, I can tell you anytime soon it'll still have a positive divergence, so we may buy it back, re-enter it there, and then swing it up to that, you know, call it back to the 200-day moving average. That's a really nice resistance zone. So, but again, as of now, kind of, I just gave you my opinion. It's not a strong one, but it's in between the final target and the suggested stop. SPCE. Okay, and the notes on this trade. I put it on as an official trade. I couldn't have been more clear, and I'll maintain this, that super aggressive gunslinger trade, I call it, and the suggestion was to take only a fractional starter position in front of earnings in case it broke out and popped up big. Didn't do that, and not to add unless it can clear. It has dual resistance. It has your 200-day moving averages. That's the red and blue line here. You want to wait till the last of the twos taken out. They both come in roughly together. I think the exponential is a little higher right now in the 333-ish resistance. So I still like it technically. You know, it's coming off that divergent low there. Had a powerful breakout, back tested for a while, moving higher. It's just hitting this brick wall of dual resistance. So I wouldn't add to it. And at this point, earnings are out of the way, so I wouldn't even take a position now. In fact, it's contrary to trading. You don't buy a stock that's below, right at resistance. It's not that much more to wait for it now to break out. There's probably not going to be a big chance of a gap because earnings are out of the way. So a breakout now would probably come in time. You know, if you have a buy stop order or an alert. What a buy stop order is, that's if you don't have a position in a stock. And let's say you're not full-time, that's like me in front of your desk all day, you can set a buy stop at, say, 335, 336, whatever, and good to cancel. And what it'll do, you don't have a position, but you're putting, it's kind of like a stop loss order, but in reverse. You don't have a position, but then the buy stop order will trigger when the price is hit, and it'll buy it for you. The problem, I like to look, especially low volume stocks like this, I like to confirm it on volume. And what that means is, oh yeah, somebody asked the other day and I don't think I got back. There's the way you do it, there's 6.5 hours in a trading day, you know, from the opening bell at 9:30 up to 4. And so basically you can look at the volume. Most charting platforms will give you either 60, 90, 100-day average volume, and just take that volume at that point in the day. So if you're 1 hour into the day, take the volume and multiply it by 6.5, and that would give you what the total volume at that rate would be. Now, the only problem with that is volume. Well, it's not a problem. You just have to understand how this works. Volume on stocks looks like a smiley face. What I mean by that, this is QQQ. I'm just going to a 1-minute chart. We'll go to a 5-minute chart. Doesn't matter. I can show you here on any time frame. Just short term. Let me turn off all my lines. Okay, so hopefully you can see I have my daybreak lines, very subtle. I don't like busy charts. So these are daybreak lines, these horizontal lines. And you can see the dates down at the bottom too, right? So volume on almost any given day for most stocks will look, unless there's a big news event, like a smile. Meaning at the open, there's huge volume. It tapers off down to around lunchtime. Traders, even those of us sitting at our desk, go to lunch. Retail traders, everyone. And then at the end of the day, towards the end of the day, volume surges up before the close. So where I'm getting at there is you kind of make an adjustment. You're always going to have, you're going to be tracking to high volume if you do this at a breakout occurs at 10 o'clock, 10:30 a.m. So just kind of make a rough adjustment. Look at the stock that you're trading, kind of see its history. You can see on QQQs, it tends to be more volume lately in the morning than at the end of the day. So, all right, that's what I mean by confirming it on volume. So yeah, going back to SpaceX, no, I'm sorry, Virgin Galactic, symbols are so similar. SPCE, it is not triggered yet. We need to, break that level out, and if so, still have some pretty aggressive price targets. It'll certainly help to see the stock market hold up and not have that correction scenario I'm looking at. But not necessary, because this, you can see this thing has about zero correlation to the S&P 500. You can see where this is trading at a multi-year low, and the S&P 500 is trading right off an all-time high. So little stocks like this that fly under the radar, no pun intended. Virgin Galactic Holdings. You can buy a little rocket ship ride up into the stratosphere if you want. It's Richard Branson's company, obviously, yeah, that's it. So those are still the targets, and I'll leave it on because I threw it out pre-earnings and it hasn't exceeded any reasonable. It's hardly gone anywhere. It's about where we added it. So there's your update. Just need a breakout. Otherwise, I wouldn't add to it or take it if you haven't already. That's my thoughts there. Somebody asked about strategy. They said, is there divergence? MSTR. No, I don't see any divergence. Remember, this is a sympathy play right now with the headlines that hit. With the huge, $40 trillion U.S. deficit, and the big deal with the bonds again breaking out to new multi-decade highs, and the Fed or Treasury taking some drastic measures. But strategy, what I can tell you right now, it's at resistance. I see some reactions there. We're at resistance. Remember, we did break out of this consolidation area. That's bullish. I just updated strategy in yesterday's video, but I'll say it again. I'm very open to it coming up to here. That would still just be a very bear market rally. I'm going to guess it's going to get sold into soon. You have the PPO about to roll over. And more importantly, remember, strategy is going to follow Bitcoin. Let me show you my Bitcoin, if I can find it. Give me 1 second. Okay, this is BTC. The Bitcoin crypto trades on the Paxos exchange. Here's the chart I've been giving you for a long time now. This is my daily chart, 5 years of trading history. Just to the left of the chart, we had a bull market that ended with a divergent high, followed by a sell signal on the break of the primary uptrend line, which gave us a high double-digit bear market there, followed by a nice, beautiful bullish falling wedge. Gave us this bull market, which ended with a nice, clean, big divergent high. Multiple sell signals, trendline break 1, trendline break 2, back test, next leg down. And if you recall, if you go back to any of the last video coverages of BTC, you'll see I've been talking about this trend line for a long time. I had 2. If you zoom in close, hopefully you can see it in the video. They're kind of thin, but I have 2 alternate trend lines. And I do that because I think they're both valid. This one right here, the higher of the 2, we broke down. This is really good support. It was one of my downside targets from all the way back here. We hit it there, we bounce. We hit it again, we bounce. We back tested the uptrend line off the 2022 lows. That's about October 2022. And we're back testing it again. And if we go a little higher, we're going to have some really nice resistance. I still think most likely Bitcoin's going to have another leg down. I think this is just a bunch of, well, I know it's documented. It's not just, it was my theory yesterday when it popped with Treasuries the headlines hit and it spooked a lot of people into where can I go, what's safe to be in right now. Well, they jumped into Treasuries because the Treasury Department said, we got your back. We're gonna support it, come in and buy massive amounts to try to keep the yields down. But again, I don't think that's going to work long term. How short it works could be a day, 1 day wonder. If it's a 1 day wonder, that's just really bad news for market. Same thing here. So anywho, it's at resistance, and no, I don't see any, to answer your question directly, at least not on any of the significant time frames. If I maybe go down to a 5-minute chart, you've got some little bit of divergence, but this move's pretty powerful. You probably want to try to time it if you're looking to short it or add to an existing short. It's still a profitable short position, so let me be very clear on that. This is an active trade. I just added a line here because I wanted to capture these reaction lows, so it's at resistance. You know, on face value, the fact it broke out of this multi-week, almost 2 month, about a month and a half trading range, that's bullish. I don't think it's going to stick. So I'm going to leave the stop where it is now, and has been a max stop on a close over the 200-day moving average because I'm open to that potential. But I'm just as open to it just crapping out and doing this anytime soon, especially with this trend indicator right here, the PPO being below its zero line, which is, done a pretty good job. Said be short throughout that, which we were, and then be long there, which no, we cut it on the bottom first. I won't use this solely as, I won't trade just on this. It's just going to confirm the trend. So that's why it was a counter trend bounce. That's why I called it in when we hit T1. Was one of the many reasons I eliminated T2 and 3, and it was a good thing I did because we avoided giving back almost all those gains on that trade. It then went on to make a higher high, and that's when, highlighted that wedge breakdown. And so that's it, guys. I just kind of fuzzy and not strong convictions. I can see it going this high, and I can see it crapping out at any moment now. That would be, well, we'll be out of it, and it would be stopped out for maybe a break even. And again, your entry point and your stop is going to be commensurate with your costs. Like many trades, I've been sticking with this one as a longer term swing or trend trade, highlighting multiple objective entries. But mainly, and I've been saying lately, we've got to wait for these recent lows to get taken out, especially the bottom of that trading range. So just like I said before, with that other security that was in a trading range, we have a very well-defined trading range. So if this breakout fails, it'll probably be a swift move down to and ultimately below. So if you're wondering where to add, a solid break in there and then add even more there. I'll let you know. Somebody asked, and it's on here, I'll get to that in a second, about MSTZ. No, not time yet for that. I would not at all use a leveraged short on this right now. I can't make, it's at resistance, but I can't make a strong case that it's going to stop here. Okay, that covers all of those and this, and then there were more. Randy, whoa, I somehow missed mRNA. At least one video behind. Did you cover it before it went parabolic? No, I missed it too, but I didn't miss it. Let me explain myself there. I'm not trying to say that, I didn't miss it, because I've talked about this in the past many times. Of all the sectors out there, you know how when we get around earnings, I always caution going into a stock. I'll give you my 2 cents. I'll even update Walmart. Somebody asked me about Walmart yesterday. Give you my charts and thoughts. I will trade a stock in earnings if I have a high degree of confidence it's going to go one way or the other. But I'll usually, like with that SPCE, take a starter only. And how much depends on how likely a gap is. So where I'm going with this is, of all the sectors out there, the main sectors in the market or subsectors, almost all of them are pretty predictable. You know when the gaps are going to come. They're going to come on earnings. Now, once in a blue moon, a company will announce a big news headline or something happens. A CEO, falls off a cliff or something, and a stock can move big, or a takeover. Don't get me wrong. I'm generally speaking, just about every sector you can swing trade, trend trade, and kind of mitigate your risk around earnings, because earnings is coming up. And I always say, get to know your stock and get to know what kind of history it has around earnings. Stocks like Netflix and some others tend to gap very big. And then there's other companies, some blue chip stocks that manage earnings so well, there's never a surprise. The guidance is right online. Now, where I'm going with this is the one sector out there, and I've talked about for years on this, that is just a wild card, and you got to be very careful holding stocks, trading them either way, is the biotech sector. And that is for the main reason, again, put aside mergers and acquisitions and takeovers, because that can happen in any sector. And there's usually rumors that that's coming. The thing about biotechs is, and again, not pharmaceuticals. I'm talking pure play biotechs or pharmaceuticals that have a lot of a biotech arm, is they have drugs in pipeline, and some have everything riding on one drug. Some have a very broad pipeline. You should know that. But where I'm going with this is, and what happened with mRNA, Moderna, is they announced, which would be huge, massive, drug that's very effective on melanoma. And as you guys know, I don't know if you know, I've lived in Florida my whole life, very well of it, aware of it. I go every 6 months and my derm freezes off some mole or spot or another that's usually precancerous. Knock on wood, I haven't had melanoma yet, but as you guys know, it's a killer. It's the bad one. And so that's huge profit potential. And where I'm going with this is there's no way to see that. But the thing about, and this happened to go their way, positive studies, clinical trial or approval, I don't forget which one. There was nothing in the chart for me to see that's coming. So I wouldn't have had you in here. I haven't touched this chart. You can see I've had this level here since 2024. You can see the pop-up box. It was resistance. So technically it was at resistance. Even if I was watching, I would have said, hey, maybe on a breakout above there. It was above its 200s. It was in a bullish technical posture, coming off a divergent high, which it had a big correction off that divergent high back to the 200s, 40% drop. But again, this was completely news induced, so I'll leave it there and just know that. And it goes the other way a lot too. You can be rocking and rolling in that little biotech that you hear's got the next cure for XYZ, and it's looking good and the studies are great. And guess what? All of a sudden, out of the blue, the FDA yanks it. They're in stage 2 clinical trials on the final run. Everything's looking good, and all of a sudden, people start dropping dead on the study. And the FDA says, nope, we're pulling it. And that stock can crater. And I've seen it dozens, if not hundreds of times. So I just, okay, enough on that. No, you've got to have a real crystal ball to kind of predict this kind of stuff. And that study could have gone either way. Obviously, it went their way. And so that's that. And where to now? Gapped in, hit resistance right here. Again, I haven't touched this chart, not a single line on this chart since we, traded it in the past. You can see divergent high and divergent low here. But it's at pretty big resistance. I would not chase it here. And again, things like that, you do a little fundamental due diligence on. This is the next resistance, 212. You can see my levels where it popped up that day, and look where it came down to. And then that line again, if I touched it or moved it, it would tell you right there. It says created on March 15th, 2023. And it's not been moved or modified since. It was that gap. So this thing is ping-ponging between support and resistance, and that's it. All right, let's move on. So yeah, you can say I missed it, but it wasn't on my radar, so I don't consider that one I missed. There's thousands and thousands of stocks out there, and every day some are going up, some are going down. Okay, and I don't mind you asking that if I, and again, if to find it, the easiest way you can use that search bar, but let me show you one other way to do it, and then let me remember what posts we're on here, Fig. You go to resources, click on resources in the top menu, and come down here, and there's this search all front page posts. There's this ticker tag. So you go mRNA. Let's see. I'm curious myself. When's the last time I covered it? June 15th. Recap. Let's see what I said. I don't even remember. I cover so many stocks. I know I haven't had a position in it for a while. mRNA, where are you? These are the AI summaries. mRNA. Here it is. Short entry setup. After breaking down through macro structural support, Moderna staged a kickback rally And to directly into broken support from underneath near 63. This offers an exceptionally objective short entry targeting a drop down to 45.50. And that was, what date was that? 45.50. That was on June 29th. 45.50, June 29th. June 29th, right here, where my crosshairs are, right here. And I was calling it down to 45.50. It got about halfway there and then hit that level. But I never followed up, and it was not an official trade idea. Somebody would have asked me about that because I'm looking at the chart. Let me see, yeah, no, those are old lines. Okay, maybe I added that one there on, no, May 8th. Okay. Either way, not an official trade. I don't even remember. Again, that would have been a subscriber chart request. Alrighty, next one up. That's all of them. I already covered SpaceX. Oh yeah. Thank you for. Yeah, I was watching anyways. Yeah, we came within a penny or two. If you are new to the site, unless I state otherwise, all trades, these are when I mark a chart up, I'm marking support and resistance levels, and the policy, as I've explained, is always to cover slightly above the actual support level you're talking. So we had a low today of looks about 130.39. So 3 cents from that, and you're talking mere basis points. A basis point's 1/100%, so it's effectively a hit there, clearly a hit. All right, we are almost done. I just want to go back, make sure I got them all. That was the FIG update, FIG trade. So here we go. Yep, a few more. I'll rifle through these. I don't think they're all questions. Somebody just thanking me for covering PetSmart, holding off. What's your view on silver? Here's a chart. Silver offers an objective short entry here at resistance because it's at resistance, negative divergence. That's a resistance level I've had there, 67.20 on silver futures. That's what they ask SI. And remember, gold too. Silver is going to follow gold. And just yesterday I pointed out that gold hit this, my fourth and final target. I give it to you a trade idea here. We'll use GDX as the official proxy. T4, we're still there. Gold didn't go anywhere today. It was flat. So negative divergence. I have not changed my outlook. Still an objective short entry. And if gold does pull back, I will almost all but guarantee you silver's going to pull back too. So they're both at resistance, negative divergence, and that's it. So you take a shot, no guarantees, and that's what stops are for. So if you're targeting T2, I think I drew the stop in on you. You know, if you shorted at the 414 resistance, I'm only targeting right now a pullback trade of about 4% on GLD. If you do that, GDX, you're going to get more than that, and silver. So you want a relatively tight stop. Okay, somebody asked, SpaceX is coming up to your target at 130. Do you think it's a good buy for a long now, or do you see more downside? Personally, I see more downside, and there is absolutely no divergence on the hourly. I wanted to check with you. All right, so here's my reply. I think the odds for a reaction or bounce off T2 are decent, not good. I'm very careful with my words. Decent is decent. Good is good. Great or very high is very high. But whether or not SpaceX does bounce there and just how far it goes will likely depend on what happens with the stock market. As of today, we have the next sell signals I was waiting for on both XLF and SPY. So assuming that those stick, which obviously I'm going to, there's no reason. It's what I've been expecting. It's happened. Why wouldn't I? In other words, they don't prove to be whipsaws with new highs in the market. Then we're probably looking at a broad-based sell-off that will drag most stocks down with it, kicking and screaming, including SpaceX. So that's and obviously, that's what I think is going to happen. It's going to go down. Now, with that being said, one can always make a case or an objective long entry or a reversal from short to long just above that. And again, just above. You don't wait for 130, to go long or to cover your short at 130.36, because other traders like me, over the years, I've learned the hard and expensive way. Don't try to cover your short trade on support. Don't try to sell your long trade exactly at the resistance, because traders like me who are in that long trade see the same resistance level, I'm going to set my sell order. I'm not going to get greedy on it. If I'm up 28% on the stock and I'm looking for a 29% run in it, or 29 and a half or whatever, I'm gonna sell a little early. So that's what that means there. So yeah, it's certainly objective. And guys, objective just means that. It doesn't mean that I like it or I'm taking it. Again, objective means it's objective to go long on a pullback to support. Especially at the very least, I expect a reflexive bounce, just one that I didn't care to. And I went on to give my thoughts again on this. But yeah, now we even said that target is unadjusted. That was the actual support. So I made very clear that, cover a little above that unadjusted target with a stop somewhat below. So that was it. So and that's the takeaway too. It's objective there. Or let's go back to SPCX. And the reason I'm expanding on this because somebody made a comment. I'd love to hear your guys' thoughts. If I'm, sometimes if I sound ambiguous, let me know. Maybe I need to be careful and how I say things. But I'm trying to draw a little downtrend line here. You can look at a downtrend line, T1. Yeah, there's a bounce, and your stop would be right there. Now again, I didn't take it for the reasons I stated right here. I think that was made clear. But thanks. If we play the bounce from 130, what's a suggested exit? Will it be T1 at 137? And then I went on to say, personally, I took the money at T2 and ran, meaning I didn't reverse. I did not reverse, did not go long to game the bounce. I'm standing aside on SpaceX to let the dust settle for a bit, just like I did with GDX recently when we hit T3. But if I did, I would only be looking for a quick reflexive bounce with a sell limit order just shy of Friday's reaction low of 135.50. So let me tell you again, that's how, and that is right here. See, T1, yeah, was it support on the way down? But see, traders are going to see that. And so my order would be just slightly below that. I don't want to try to milk, 100% of a move and risk it reversing there. So I would have only looked for a reflexive bounce had I taken it. And I pretty much we would have, you can see we came just shy of that so far today. So it would have been about a 3% bounce. So pretty much that bounce target, which, if I had taken it, would have already been hit. And that was that. So hopefully you got that in time. And then this is the comment. So let me know your guys' thoughts. And by the way, I welcome these comments, and I mean this wholeheartedly. If something's not clear, I'm going to just read it out. And if you guys have, if others agree that maybe, that's ambiguous, remember, this is not a follow me site. I'm not here it's the whole teach a man, give a man a fish, feed him for a day. Teach a man to fish. That's what I'm trying to do. I'm sharing what I do, what my reasoning and logic, sometimes so long-winded, like these videos go an hour or more. But here, I have a request. We all know things can go one way or the other. Can you please try to be absolutely clear with no confusion what side you think it'll play out and why? No need to caveat and cover bases. And I don't do that. I just want to let you know that this is they're referring, I believe, to this post, which I made very clear my preference. But then, just because I'm not in it doesn't mean it's not objective to go along there. So no need to caveat and cover bases. In your above two paragraphs, you are saying both at the same time that one, sell signals happen, so everything is going down. Said yes, sell signals happen, and I think everything's going to go down. And number two, you can make a case for going objectively long. Exactly. So hopefully I explained that well. They're certainly not mutually exclusive. Or you can make a case to go long on a pullback to support all day long. That's somebody's interpretation. You can't make a case to go long in a rally into resistance. You can only make a case to go short there or wait for a breakout above resistance. So, that's what it is. This is what I thought was going to happen. So I can recognize was objective to go long today when my second target was hit. But I wasn't doing it because I think the sell signals we got today that I was expecting and waiting for on the financials and the S&P 500 are going to lead to more downside in the coming days to weeks. So that's it. This is, that's the caps kind of, change the tone a little bit. And that's why I wanted to address this. But again, guys, I have thick skin. This doesn't bother me. And I am reaching out to you guys, and I mean this wholeheartedly. If you have any comments or feedback on that, if you're thinking, yeah, I agree, that's very ambiguous, can you be even more direct? I don't think I could, but maybe. There's a lot of nuance to these tradings, and again, the one thing I always tell you is I'm going to be wrong. I'm going to be wrong a lot. My job here is it's not a follow me site. It's to give you guys identify key technical levels, objective levels, and I will never hesitate to tell you when I'm going to pass on a trade idea I'm throwing out to you. It might look objective, but I will usually tell you, hey, it's not. I'm not taking it. I might later on. I'm watching it, or no, I'm not taking it, and here's why. And that's what I did before. So let me know if I need to change my communication style there, or run it through ChatGPT or something like that, and I'll be glad to. I think being decisive will improve communication tremendously. All right, guys, I welcome the feedback. If you guys have any thoughts on that, either way, please bring it. I'm always trying to improve this site in any way I can. Okay, last two, I promise. I just jump forward to the previous post. This was yesterday. Alan asked, Walmart's earnings are tomorrow morning. How should we play it? 5% expected move, and sentiment is bearish, even though revenue beat is expected. All right, so again, here's my thoughts. Always a risk holding a swing trade into earnings, but here's where I think Walmart is headed in the coming months plus. Following the recently highlighted sell signals, which you can go back, click the ticker. I've covered this, which were a break of the blue uptrend line, the 200-day moving averages. Here, let me just get to the chart. You can read that post, so I can speed through here. All right, this is it. I'm going to go to the live chart, but you can see my arrows. This is me clearly expecting a post-earnings drop, and this is where the stock's going. I'm going to go to the live chart just so you can see it a little better, because this is a very important stock. So the blue uptrend line, I've been highlighting this one for all. Big divergent high, sell signal 1 on the minor trend line break here. This was a much more significant, well-defined uptrend line. I just covered this stock recently. That comes off the December lows. It broke down, and the added bonus or confidence that I have the stock will drop. It for the first time lost to 200s. Yeah, I did just cover this stock, and it's been below. So that it went into earnings in a very bearish technical posture. This is a daily chart. These are multi-month, even year-plus long divergences it built with multiple sell signals, and only recently flipped under its below its 200s for the first time since this whole bull trend for years. This is a multi-year bull trend. So a clearly bearish stock, overhead resistance, and that's, and there it is. So you saw on the arrow breaks that I had, first target going down, rough, these are all support levels, reactions along the way, and that's what we hit. That first 103.43. I created that level back in 2022. Haven't touched it since, and that's exactly where they parked it today, or hit roughly there. Now, still has divergence. Remember, in a bear market, divergence either gets burned through. Well, we had a little rally off that divergent low. It's even bigger now. Could set the stage for a counter trend bounce, but at best, it's probably just going to be a bear market rally. They might want to try to come and test the bottom of this gap, maybe even try to backfill it. I wouldn't be a buyer, because this is where I think the stock's going ultimately down here. That's where my arrows had it going, to this longer term primary uptrend line. So that was another earnings call. I didn't trade it, but give you my thoughts there. And again, my thoughts are clear. Look, always a risk holding it. You guys do what you want, trading stocks into earnings. Update on covered strategy in Bitcoin today. There it is. PGR, I already covered PGR. And then the last one right here, this was today. Yesterday, two replies. So I replied to it today. Somebody asked, can we get an update on SAP? It was 206 when you suggested short. Currently, it's 216. Objectively, do you feel it's a better short today, or is it a long now since it seems to be breaking out? Any rationale would be helpful. Great question. And then times 2. So yeah, you guys do that. That's why I do these videos. Some people have the same question, and others might not have been watching it or maybe interested now. So Here's my reply right here. Great question. No, I don't. I do not feel it's a better or an objective short today. The reason is that the stock has moved down. I'm sorry, the stock has moved above the intersecting downtrend line and 200-day average that it was posted as an objective short when it rallied into it from below. That was a dual resistance level. So with that being said, I don't see any reason to modify the trading plan. I still have a suggested stop above 20. That was the stop given on the trade, 223.45. That stop was intentionally set there to where I expect it would be just out of range. I'll get to the chart here in a second. Just out of range of a stop rate, if that's what this is going to be, which I think it will be. So this is a great question. Is this a case where, and I go on to say, other than some type of candlestick reversal pattern, the next objective short entry will come if the stock clearly falls back below the recent breakout by going back down below the downtrend line in 200. So let me get to that. So here's an example of a stock that, I have a trading plan. There's no reason to modify the trading plan because, again, my stop, I would never set a stop right here. That's where the retail, a lot of, no offense, dumb money retail traders put their stops real close above resistance, the downtrend line. Longs will jump in. I think this stock is super extended. Overbought is not a sell signal. So, and again, there's no way for me to make an objective case to short it. It's a breakout. If anything, you put a gun to my head, you got to buy the stock. You got to go long because it's bullish. It just popped through its 200-day moving averages, the downtrend line, and a minor price resistance. However, it's a breakout I suspect will fail. Extremely overbought. The last time this stock was this overbought, let's put a line here, right about the 77 level on the RSI. It was right here. And we put in another tap of that level, slightly lower, a little divergent high. And from there, the stock fell 18, almost 19% back to its 200s. So that's it. So this is one, with a trading plan. If that is your trading plan, if you're targeting T3, which I still maintain, there's your stop. There's your final target. If you were only targeting T1 or 2, you should add a tighter stop. You're probably out. But again, I can't, unless there's some kind of bearish candlestick reversal pattern, I need to see it fall back below here. 60-minute chart, getting pretty extended, but I don't even have a clean up trend line. So I do have some pretty big divergence here on the 60-minute, you can see. So yeah, I still think this trade has a good chance of playing out, but I just can't make an objective case to short it. All right, unless it falls back down below there. Okay, guys, another long video. I just wanted to pack it in. Hopefully it's helpful. Again, any feedback, constructive criticism is welcome. Let me know. Yeah, and of course, if you want any updates on any trades, I'm working on it today. I had to mention earlier in the week I had a doctor's appointment today, just a routine, the annual physical thing. So I was out a little bit. I've also been doing some improvements to the site, working with a lot of these AI models, kind of make some changes and improvements. So spent a good deal of the day doing that. Plus it was just a consolidation day, mostly nothing big today in the market. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.